Hey there, pro traders, and welcome to another Monday market review. We are partially doing this live with the folks who have joined our Discord channel. So look out for that in the future. If you want to join us when we actually do our market review live, we will be making that available to you. But you do need to be a member of our Discord channel. So check us out on our Facebook page at the Forex Trader and make sure that you get the link so that you can join us there. Right, so in our weekly review, we obviously give you an overview what's been happening in the Forex markets primarily, but also a couple of others we look at. And of course, what to expect for the week ahead. Now, we do focus on our strategies as always, but certainly I think for most people, you will find this useful. All right, so the theme, I suppose, for last week, post non-farm payroll and what have you, was that there was some activity that started picking up during the course of that week. And starting, as always, with the Euro USD here on the weekly time frame, you can see that we do have that bearish impulse candle on the weekly time frame, most of which took place pretty late in the week. Now, this is after having gone sideways for quite some time. So if we just have a quick look at the daily time frame as well, of course, you'll notice that really it was just Thursday where we had that bearish breakout on this time frame, and that obviously brought us into a period where we'd start to look to trade this this instrument again. Now, bearing in mind that we're also going to be looking to trade the lower time frames. Primarily, we're looking for markets where we are, first of all, in a trend, and secondly, in an impulse wave of that trend. And we do that across multiple time frames. Now, but looking here at the daily time frame on the Euro USD, you can see that as of Friday and certainly through the course of today, we're looking at typical behavior that happens in a bit of a retracement, and that's what we're getting at the moment. So we're not really looking at doing anything there at the moment. Right, just getting everything going with all of our different apps running at the same time. All right, so here we are on the cable. On GBP USD, you can see that we've obviously got a stronger bearish trend, an impulse wave of that trend here on the weekly time frame. So we've been discussing this one obviously for a while. We've seen multiple bearish impulse candles in this bearish trend and impulse wave of that trend. So that's always been a good one to look at. Certainly, it is valid conditions for the daily impulse. So just dropping down to the daily time frame, we had a setup for a daily impulse, obviously last week, close of Wednesday. Now, it's not going anywhere at the moment. We're having the same kind of retracement here that we're having pretty much on the Euro. So again, looking for this to roll over through the course of this week. Now, it doesn't mean that it will. Remember, we're not making predictions here, but we are looking for an end to this retracement and a resumption in the next bearish impulse wave. But we don't assume that that's going to happen. We wait for the market to prove itself. But if you did get into a daily impulse on this one, you're still waiting to trail your stop on that. Right, weekly time frame on the yen. This is one where really we could see now that this bullish impulse wave that we've been in for a couple of months at least, in fact, going on 3 months, has now come to an end. It doesn't mean that the trend has come to an end. We are also in a retracement wave on this time frame. So again, this is one where we're looking to just bide our time. And here on the daily time frame, you can see that bullish cyclicity having come to a distinct end. Really, this is a time to just sit on your hands and wait again for the market to prove itself. So nothing for us to do on this one. However, on the Swiss, the dollar Swiss, the Swissy, we've got a very strong bullish impulse candle there on the weekly time frame. This is certainly one that we've been looking to trade. We've been trading this across multiple time frames, probably one of the best instruments that we've traded in the last month or so. So that's in a trend. Admittedly, it's still not an established trend from a technical point of view, but with that strong established bullish impulse breakout wave, we're treating it as if we do have one. So dropping down to the daily time frame, another example, obviously, where you could see we did have a setup for a daily impulse. In this case, it was close of play on Thursday. So opening a trade on Monday, you haven't been able to trail the stop or anything, but it's looking fine. And certainly, as I say, this is one where we've been able to make some good money on this on the lower time frames. So if you're trading H4 impulse as well, we did have that inside candle, inside bar on Friday. But when you're trading an impulse strategy, you do have the option of checking, obviously, on multi-time frame to see if on the lower time frame that cyclicity is still intact. So let's go and have a look at, in fact, that's 1 hour. Let's look at the 4-hour time frame. On the 4-hour time frame, you'll notice here that we do have that cyclicity pretty much has been still intact. It did come to an end with a breakdown in that cyclicity here on, what was that? So that was 4 p.m. on Friday. So pretty late on Friday. Now, a lot of folks will wait for that cyclicity to resume. And that's really where you're looking for a class 1 or a class 2 pattern before you start trading it again. If you're happy to go with a class 3, this is one where you'd actually already have taken a trade this morning with this bullish impulse candle. So that is an option certainly for you to go for. But we do recommend that you wait for a class 1 or a class 2 pattern on the execution time frame. Right, on USD Cad, we spoke last week about the fact that the market was coming up to this resistance level, and we expected it to test it. As with any support and resistance level, as price action traders, we wait to see what the market does. We don't second guess the market. Now, so far, it's shown that it's failed the test. That doesn't mean that the market won't try again through the course of this week. However, should we fail to get a higher high during the course of this week, that will also mean that that high is ringed, which would ultimately mean that this bullish impulse wave failed to break through. That doesn't mean that it won't continue at some point, but it does mean that for the meantime, we're pretty much leaving it alone on this time frame, or certainly this time frame as a selection time frame. So dropping down to daily, however, we have had bullish cyclicity on this, certainly for folks who are looking to trade this with a class 1 pattern. There was a possibility of looking at that last week. In fact, on Friday, excuse me, but on Friday, obviously nothing happened. It rolled right over, isolating the previous candle as a ringed high, and also indicating to us that we've had a breakdown in bullish cyclicity. So that really is what led to that high test or inverted hammer on the weekly time frame. It also means that we're staying very much away from this. Okay, so moving to the Aussie, this at long last has done pretty much what the Kiwi did a while ago and given us a bearish breakout on the weekly time frame. So our HTC channel has been breached and we've got that close on the outside. That does mean that for the first time in quite some time, we're actually able to use this as the weekly time frame as a selection time frame for the Aussie. Now we're only able to do that from the start of this week. So despite the fact that we've got bearish cyclicity very much intact here on the daily time frame, and in fact there was also a daily impulse set up last week, end of Thursday, we haven't done anything with that. So looking to see what happens here. We did get a bit of weakness showing itself on Friday with a close inside. So at best we're going to get a class 2 pattern, but that is in fact still valid. And if you're a hybrid trader, dropping down to H4, on this, just waiting for this to obey my commands. Right, there you go. You can see that in that bullish retracement, we still have bullish cyclicity intact. And as a hybrid trader, you'd be waiting for a breakdown in that bullish cyclicity. So still waiting, sitting on our hands. That sitting on your hands is one of the most important skills that you can develop as a trader, folks. Okay, here's the last of our US dollar pairs, our majors and minors. So the Kiwi giving us another nice, strong bearish impulse candle. This one, as I mentioned, this is the third candle we've had outside of our HTC channel in this strong established bearish impulse wave. So certainly this has been valid conditions for daily impulse, looking to trade breakout strategies. So I think that quite a few folks actually did enter at the end of the previous retracement. If you were using standard targeting, that went comfortably to your take profit. But if you're using the advanced targeting with trailing stops, then you're actually still in this trade. If you did take that profit on a nice bearish winner, you would have probably gone short again at the open on Friday. So this is another one, looks very much the same as what we just looked at on the Aussie. Looking for this retracement to come to an end and for the market to roll over and go south again. So that's pretty much it for the moment. You can also look for a bearish hybrid on this. But again, you can see that this bullish cyclicity here is still intact. Right, moving on to our yen pairs. Some of them have offered some opportunities, but as I say, most of it's been pretty much on lower time frames. But let's run through them. The correlation across these pairs isn't as high as it has been for some time. So let's have a quick look here on weekly for Euro Yen. Last week, giving us a clear indication that bullish cyclicity has broken down. So where we were treating this as a potential trend on the weekly time frame, it's now a false breakout. So for those folks using the LPO channel, you will be widening your LPO channel for this time frame for this pair. So nothing for us to do there. But if we drop down to the daily time frame, that strong bearish impulse candle on weekly has given us a bearish breakout on the daily time frame. Now on Friday, it pulled back inside the HTC channel. Let's wait and see what it does today around this, what was support, now resistance level. And again, another one that you could look at for a bearish hybrid, should we get bearish resumption here in this potential trend, then we would look to potentially trade H4 impulse and even the lower time frame. So keep an eye on that one. And on the Gbp Yen, so as I say, this is obviously on the weekly time frame. You can see we have not had a breakdown in that cyclicity, but we have been in a bearish retracement on this pair for a while. So a bit of a, I wouldn't call that a hammer, it's almost a hammer, but something of a low test candle. It certainly tested the support level that we've got intact over here, and it certainly respected that support level so far. If you are a hybrid trader, again, you may well be looking at an opportunity on this on the daily time frame. Let's have a look at that. But you can see that the bearish cyclicity, again, still very much intact here, looking for a breakdown in that cyclicity or any indication that this market may turn around and go back in a bullish direction. But for the moment, we're just biding our time. So there's no valid pattern here. We are very much inside this quite broad HTC channel, thanks to these long extended waves. So again, another one to leave alone for now. Right, sorry about the delay between the pairs, folks, just trying to coordinate all the technology here. Okay, so on the Swiss Yen, we've got the similar picture there to what we've just looked at on Gbp Yen. Now I really expect this to look a little bit more promising on the daily time frame. We'll go there in a minute. But again, this is still a potential trend, but it is intact. But nevertheless, it's a retracement wave or phase 2 wave in that trend. So not suitable for anything at the moment, except for you folks who like the hybrids, in which case you need to look at the cyclicity on the next lower time frame. And that is very much still intact as a bearish trend. Also a potential trend, it's a class 2M pattern, but we are very much outside of the HTC channel. So as a selection time frame, the daily is much more useful than for execution. So we could just drop down to H4 again. And for those of you who are trading the H4 impulse, you would have probably shorted this market already this morning. So it's not really doing much at the moment, but that is a perfectly good entry. And not that I'm trying to predict anything here, but the odds are very much in our favor that this is going to roll over and keep on going south. So very strong bearish impulse here. Again, you can see the Swiss franc coming to the fore. We've it's weakness, obviously. We looked at the dollar Swiss just now, and I mentioned how great that has been to trade. And you can see here a similar sort of picture when it comes to using the daily time frame in any case, where the Swiss franc is involved. So that's, again, one of the best ones for us to look at. Going on to CAD Yen, when we get through there. So you can see the retracement here, not nearly as strong as we've seen on the others. So we're not seeing the same kind of weakness in the Canadian dollar against the yen as we've seen, for instance, on that Swiss franc. So that being said, it is still nevertheless a bearish retracement on this time frame. So again, the only possibility you'd be looking for here would be a breakdown in this bearish cyclicity on the daily time frame, and clearly it is still very much intact as bearish cyclicity. So should that come to an end again, you have the opportunity to look for a bullish hybrid on this, but at the moment there's nothing, and there's nothing here for us either using the daily time frame for selection either, both inside of the channel. And having said that, I suppose if we do get a ringed high, we see the end of this bullish retracement wave on this time frame outside of our XA leg, then we would have a class 1 valid class 1 M pattern should you be a pattern trader. And likewise for the more aggressive traders, if you're looking for a breakdown in this bullish cyclicity, which is still very much intact here on the H4 time frame, in order to go for a bearish hybrid on this, then be my guest. That certainly would be valid thinking. Okay, so next up, Aussie Yen. Another one where similar to Euro Yen, you can see the breakdown in the cyclicity here, thanks to last week's bearish impulse candle. So that is over, very much back inside of our HTC channel. Time to sit in our hands, certainly when it comes to using the weekly time frame as a selection time frame. But you can't say the same here on daily, where we've had a clear breakout. We've also seen this, what was support, now resistance level, the bottom of the HTC channel being respected as resistance. So that's all well and good. And certainly last week, this was valid to trade in a bearish direction on the lower time frame. So let's drop down to H4. But before I do that, I just want to point out as well, we can see that certainly with today's candle giving us that higher high, we are in a bullish wave as far as this is concerned, coming back up to test that resistance level. And we need to see what happens there. And the best way to do that is to drop down to the lower time frame, in this case H4, where we will be looking for a breakdown in that bullish cyclicity. Now, it hasn't happened yet, but this bearish impulse candle this morning is showing some promise as far as that's concerned. So let's see if we get a lower high here and have the market roll over again. If you do, perfect setup again for a bearish hybrid, which will also set you up to start trading bearish H4 impulses and other strategies on the lower time frame. Some of the stuff we're going to be looking at later in the week. The last of our yen crosses is always the Kiwi Yen, the additional Kiwi weakness here showing itself, where we're very much back inside of the HTC channel on the weekly time frame. So not interested in this again. Also, it is a phase 2 as well. So we're really not using this as a selection time frame. But when it comes to the daily, that's been great. We've been outside of our HTC channel for quite some time. And as long as you're not requiring a class 1 or class 2 M pattern, and have been happy to trade in this this bearish impulse wave, then certainly the daily time frame for selection has been great. Dropping down to H4 again, where you can see that we had multiple opportunities through the course of last week. There was some nice H4 impulse trades. It paused for thought along the way a little bit, and then of course on Thursday into Friday we saw the end of that bearish cyclicity. It broke down, and we are back into that bullish retracement that we noted just now on the daily time frame. So looking for this to come to an end. A similar picture to the Aussie, not quite an engulfing candle, but certainly an impulse candle. Let's see if this does roll over. But as always, we don't predict what's going to happen. We wait for the market to prove itself, and then we take appropriate action. Okay, so that's the last of the yen crosses. Those are the folks are the main pairs that I trade, certainly on the lower time frames. When it comes to trading higher time frames, daily, and even H4, we're obviously happy to trade right through all 28 of the main pairs. The next lot obviously being the euro crosses. And here you can see how on, well, certainly through the course of last week, we had a retest of this resistance level. The market failed to break through it. That's quite indicative. We're very much inside of this HDC channel and have been for a while. So we're not bothered about many of these pairs. I'll just move on. Don't want to waste your time looking at absolutely everything. Right, Euro Swiss, let's just look at weekly quickly. Inside of the channel, nothing going on there that we're particularly interested in. I know a couple of folks looked at this and have traded this last week. Richard, I think you're one of them. You got a nice winner here on H4 Impulse, certainly outside of the channel, so why not? And saw a retracement through the course of, where was that, Thursday and Friday, or Wednesday and Thursday and Friday, but that has led to us seeing a respecting of the support level, which is the top of our HTC channel. And as of today, that low is being ringed, and it looks like we're getting a nice bullish resumption here. So unfortunate that we don't have what we need on the selection time frame on weekly, because should we have had that, we would have been able to look at this as an entry for a daily impulse. Certainly not one of the pairs I trade very often, but that is definitely looking a lot neater than we very often see on this instrument. So keep an eye on that. Certainly if that's come to an end, you'll also be able to look at trading H4 impulses. For anybody who is looking to trade the H4 hybrid, you would have actually got into this at the end, well, about 8 p.m. on Friday. So if you're willing to trade that late in the week, you would have had a nice entry, and that trade's doing very well. So for anybody who is brave enough to have that open over the weekend, good for you. Right, next up is Eurocad usually. Right, here we go on the weekly time frame. Look at that bearish engulfing impulse candle. So we did, and we need to treat this obviously with that inside candle as a retracement wave, albeit a very brief one. And in fact, if you look at the daily time frame, we do see that the cyclicity supports that. There we go. You'll see that we did have some bullish cyclicity on this over the last couple of weeks, but that has come to an end. And as of Friday, we've had an impulse wave followed by an impulse wave. So a very aggressive reversal, which is all well and good. And if you're trading the, well, if you're looking for a hybrid entry on this, you really need to have another retracement and a resumption of the bearish direction, but that would probably push that into daily impulse territory. Let's see what happens with the support level on the weekly. Not sure what's going to happen there. Let me just go to the appropriate chart. Let me just go to this appropriate chart. So here we have the Eurocad again on daily. You can see that we're still inside the HTC channel. There's that impulse wave followed by an impulse wave. We'd like to see a breakout on this before we can start using it on the lower time frames. So still nothing for us to do, but there is a potential class 2M pattern in the making, which should obviously be a bearish head and shoulders pattern. So let's keep an eye out for that through the course of this week. And Euro Aussie weekly time frame, really this is pretty dead for us. Even here on the daily time frame, that attempted breakout that we had turned into a false breakout with a breakdown in cyclicity. So another one to leave alone. Remember, folks, it's just as important to know what to leave alone as it is to know what to go for. Right, Euro Kiwi again on the weekly time frame, well inside of our HTC channel. It's quite an extended bullish impulse wave. This nothing for us to be able to do on the weekly time frame. Can't use this for selection, but let's have a look at daily, where you can see that although as we discussed before, we have been in a bullish trend on this. We had a nice bullish impulse wave that was tradable all the way up until, what was that? I think Tuesday last week, where the party pretty much came to an end. We did have a retracement wave, but cyclicity has broken down on this. So that bullish trend on this time frame is over from a technical price action point of view. So another one to leave alone. Right, so looking at our GBP crosses, going to go through some of these a bit more quickly. Nothing for us on GBP Swiss. GBP Cad, you can see that Canadian dollar strength giving a lot, making life a lot more interesting for us. So also GBP weakness, I mean, we have seen that has been one of the themes over the last couple of weeks. And last week giving us another bearish impulse candle here on the weekly time frame. So this is a very clear bearish trend on weekly time frame. So we have been able to use this for a while for selection. And I'm repeating myself from prior weeks. Let's have a look at daily. And you can see that in this one we did have a bearish, a couple of bearish setups for daily impulses. That one obviously hit take profit. We discussed that a week ago. Last week's retracement, yeah, it did come back inside of the channel for a while, but where we got our final setup for a daily impulse, it was closing outside of the HTC channel. So as long as you're not requiring a class 1 M pattern here, you absolutely could have taken that, which we did at the open on Thursday. So that's looking fine. We haven't been able to trail the stop on it yet. Let's wait and see what happens there. But at the moment, it's doing okay. Obviously, if in an impulse wave of a trend on daily, you can use that as selection time frame for H4 impulse as well. Right, Gbp Aussie Weekly, that you can see last week was absolute nothing burger after the prior week's bearish impulse candle. So this low not yet ringed, that is an inside candle. So there is the possibility of a bearish resumption here. We need to wait and see. But that's pretty much the theme generally for this pair. Not really anything for us to do there. And you can see here, even on the daily time frame, we are very much inside of the channel. Last of our GBP crosses, GBP NZD, maybe a little bit more bullish than what we saw there on GBP Aussie, but really nothing doing for us there at all. And all it's been doing through the last week, and you can see it did that pretty much every day from Tuesday up until today, is test that resistance level. It hasn't done anything with it yet. Looks like today's higher high is going to ring that low. So we'll have another bullish wave starting at the end of today. But let's see what happens. This may well roll over and go south. So, but nothing for us to do. All right, so that's the end of all of the GBP crosses. Now we go into our other crosses. And here you can see where we spoke about Canadian dollar strength, as well as the Swiss franc weakness. And you can see the combination of those two here on this currency pair, where last week not only gave us a continuation of this bullish impulse wave, but gave us a very strong impulse candle and closed right at the top of the price range on Friday. So very strong movement there. Looking at this on daily, you can see we had well, first of all, we were actually in a trade here beforehand that you will remember from from last week's session. But had you not been in that, you would have actually got another entry here, or if you're scaling in, you would have gone long again. So we've hit our take profit on that. If on standard targeting, if you're trailing it, you'll have been able to start. You'll be able to start trailing it using advanced targeting now, or if you got taken out, you'll be able to get into another trade. So a very nice one to look at. Keep looking at through the course of the week. If you were trading H4 impulse on this as well, you would have possibly. Let's just look at H4 once that. Once we saw the end of that retracement wave, if you were looking for a hybrid, I think the very first hybrid opportunity was in this region over here. I'm not sure that it survived though with that retracement. So that was the next opportunity right there for a hybrid. You might have been nailed on the first one, but you would have been able to get in again, and that's doing perfectly. If you were waiting for H4 impulse, I think that's the first opportunity there. So again, if you're using advanced targeting, you're actually still in this trade. Otherwise, you hit your take profit very comfortably. Gave another entry over here. You probably have to use the ATR stop for that. Right, on Aussie Swiss, another one that really we've just left alone. You can see last week giving us that hammer candle inside HTC channels, no valid patterns, one to stay far away from. And Aussie Cad, there's that Canadian dollar strength again, very strong bearish impulse candle on a weekly. Not using this as a selection time frame, but it's worth noting that. And of course, that's what it looks like on the daily time frame. So very strongly bearish over the course of last week. And if you were looking for an opportunity to short this with a daily impulse, not sure that we actually got one in the end, unless you we're prepared to use ATR targeting on Friday. But certainly another one where there have been opportunities for trading it with on the lower time frame. I know that there was a no, that's actually a class 1W pattern. No opportunity there. So had you tried to short this over here, not that you would have with that higher close over there, it would have been a class 4M pattern at that point in time. So I really don't think you would have. That would have been stopped out though, unfortunately. But apart from that, you can see it's been pretty strongly bearish all the way up until Friday, where it really started going sideways. Right, last of our Aussie crosses. Here's the Aussie Kiwi. You can see that last week we really just had the spinning top. So both of them showing, well, they're pretty equal at the moment in terms of the overall strength and weakness. Certainly as far as last week was concerned, but you can see that in the longer term, the Aussie is still stronger than the Kiwi. So we've noted the Kiwi weakness for quite some time now, and really this bullish trend just illustrates that. So if you were looking to trade this, yes, we're able to use this as a selection time frame, being in a bullish trend. And certainly we discussed, even I think at the beginning of last week, the fact that we were back into an impulse candle here. Excuse me. So you could drop down to daily. And we've been looking for an entry. And of course, our final criteria for a daily impulse was not met. So nothing going here. And you can see that we have, in fact, had a breakdown in that bullish cyclicity. So that inside candle that we saw in the weekly time frame is not just anything. It does look like that bullish wave on weekly is over. So we're not trading this at the moment at all. Right, last of our two Kiwi crosses here on Kiwi Swiss. Really in the weekly time frame, stuck inside of it. Remember, both these currencies are pretty weak. So dropping down to daily, you can see that it tested the bottom of the HTC channel here with the New Zealand dollar showing additional weakness there up until Friday, where the Swiss franc pretty much overtook that. So stuck inside of a channel, not interested in trading this at all. But when you combine it with the Canadian dollar strength, obviously it looks a little bit different. As we just mentioned last week, very tradable, using this as a selection time frame here on weekly and dropping down to daily for execution, where, as you can see, we've had no opportunity to short this. Our final setup conditions not met. This really is just carried on going south throughout the course of last week. But of course, that's what our lower time frame strategies are for. So here on the 4-hour time frame, you can see the bearish cyclicity really staying pretty solid through a lot of last week and giving a couple of opportunities to short the market. I'm not sure exactly what we did on this one, but it's certainly that cyclicity giving plenty of opportunity, as I say. The last of which, had you not been in the market, would have been here on Friday's midday candle. You would have been able to short it again, with nothing really happening since then. So with your trailing stop, you'll be almost at break even. Doesn't look like it's going to work out, but you never know. Let's wait and see what happens there. Right, so that's all of our currency pairs. Having a quick look at some of the others. A bit of a story from last week, obviously, was the strong bearish movement in gold, both real gold and, as we will see, virtual gold in terms of our cryptos. Everybody's talking about crypto weakness at the moment. In any event, here on gold, you can see certainly it came down very strongly with last week's bearish impulse candle. But we don't have any valid patterns. We're inside of the channel, so we can't use this for selection. But certainly when it comes to the daily time frame, just to reiterate what we discussed last week, where we spoke about the fact that we were outside of the channel, and we're looking to trade this. So absolutely no problem doing that. should you have gone with this M pattern over here and ignored the weekly time frame, you would have shorted the market here. But of course, for me, this is really just an opportunity to trade on the lower time frames. So dropping to H4, well, there you can see one that ended up working out. It almost didn't work out. It almost came back and hit our trailing stop. In the end, it did work out fine. But regardless of that, I think even, yeah, there we go. This morning, we've actually had another opportunity. Should you have been, actually, that was at, that was 9 a.m. broker time. So no excuse not to have taken that one. Perfect little setup for an H4 impulse, should you not already be short this market. Okay, so looking at the indices, so we all know what happened there. So a lot of the indices have been going south for a while, but at Friday really was a bit of a retracement, and that's why we've got this hammer candle here on weekly. We are still outside of our HTC channel, so that is one thing that we can say about this. Is despite the fact that it's a hammer candle, we did get an outside close, and on daily time frame, you can see there's that retracement. Bearish cyclicity very much intact. But obviously, we're still looking at a potential class 1 M pattern. So absolutely, if we do get a bearish impulse candle, we can look to short this. I wouldn't go any other direction at the moment with the stock markets. But having said that as well, if you're a hybrid trader, you might be interested in looking for an end to this bullish cyclicity here. And that may well happen in the next few 4-hour candles. So if we were to get a bearish impulse candle here, that in fact would be a bearish setup for a hybrid here on the Dow. So I preferred looking at the other exchanges, the other indices. Let's have a look at the S&P. S&P and NASDAQ generally move a lot more decisively. So here we are again. We got that outside close as we did with the Dow. And you can see this bearish cyclicity here also. In fact, it's even stronger than the Dow. And I think you'll see that on the NASDAQ as well. And again, looking for a breakdown in bullish cyclicity in the next few H4 candles. There's the NASDAQ coming up. There we go. We've been outside, as we know, for, well, 3 weeks now. This is the third week, third outside close. Daily time frame, almost carbon copy picture of that. So be careful that you don't overexpose yourself by taking all of these trades. Go for whichever one suits you best. For me, it's generally either the S&P or the NASDAQ. So it's one thing with our strategies, we do like to trade strategies that are valid regardless of the instrument, as long as it is liquid and volatile. So here we have oil. Just another week of going sideways here on the weekly time frame. So no change from our previous discussions here at all, and still very much inside of our HTC channel as well on the daily time frame. So want to leave alone for the moment. As you can see, this has been going sideways for quite some time. And there's the Bitcoin story. So last week it did recover a bit towards the end. Obviously, we're still under the, well, a smidgen under the 30,000 mark. As I mentioned a week ago, for me, these are normally buying opportunities. Excuse me. So we did get a breakout though, and we have seen a close outside of our HTC channel here. So looking for something a bit more decisive before I look to buy some more Bitcoin. And at the moment, you can see on the daily time frame, despite the retracement that we had, this is still very much a strong bearish trend. So if you're doing anything with, if you're trading it using our strategies, obviously the only way you're looking to go here at the moment is still short. Right, and last but not least is the story for me almost of the week or the month, is the fact that our trend on 5-year US Treasuries has finally come to an end with a bullish engulfing impulse candle last week. So we were already out of our bearish trades with our trailing stops having been taken out. So we didn't get anything with these attempts at a resumption. So I think the last one potentially we had was the short here for a class 2 M pattern and a daily impulse, which ended up being stopped out almost at break even, but not quite. And now we can see that this bearish cyclicity is very much over. So another one that we're leaving alone at the moment. So I'm pretty much happy with the fantastic profitability that this generated over this time frame. That's why I've actually got this a little bit compressed here. You can see how significant this bearish trend overall has been. It's had a few pauses along the way. Yes, that is true. But really, I mean, that's a carbon copy. We've discussed this before. A picture perfect example of a hybrid on the daily time frame, because we were in that bearish trend on weekly. So folks, that's just really an example of an easy market to trade. I know we don't get them very often, so it's nice to have a look at them when we do. All right, so that's pretty much it from me. This has been our first test, obviously, of trying to do things live. I think in the future, I'd like to get a way of seeing if we can have a bit more interaction, get you folks chatting to me as well. I'm still getting to know the Discord technology, but if you are watching this as a recording, please make sure that you do go to our Facebook page, the Forex Trader, and there's a link there as well for you to be able to come and join our Discord channel. We are going to be doing quite we are going to be doing quite a lot of live trading and training on Discord now that we've got this available to us. So if you're interested in seeing us trade on the lower time frames and learning how we trade price action across the board, then make sure that you are part of our channel. Right, folks, for those of you who've been around a bit longer as well, bear in mind that in order to qualify for our free live training, please make sure that you engage on our Facebook page. I think I've given guidance on that, but in case you haven't seen it, please remember that we really enjoy your comments. So do get involved in the conversation. Comments especially, you know, folks who are commenting and engaging in conversation are the people who are going to get their free invitation to join us in our live training and live trading. All right, folks, so that's it from me for now. I hope you've enjoyed this. If you've got any questions, pop them into the comments below, and I will make sure to answer them. If you're watching this on YouTube and you're not already a subscriber of the channel, make sure you do subscribe and hit that notifications bell. We've got lots of great material for you coming up. All right, folks, that's it from me. Have a great week's trading. I do look forward to seeing you folks here in the Discord channel later in the week. So make sure you look out for the announcements of when we're going to go live. I'll chat to you then. Cheers. Bye for now.